Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's December the 4th, 2017. It's hard to believe, but we're almost through 2017. Now, there's two large areas that I want to speak about today, and that will be the U.S. tax cuts that you're hearing quite a bit about. And then in the second place, I want to talk about Bitcoin, or more specifically, cryptocurrencies. And so on the slide in front of you now, I'm sort of giving you the 4 points that we'll cover in terms of big headings that are going to be the sort of the details of today's presentation. And that'll be the proposed U.S. tax cuts, the rise of cryptocurrencies, the pros and cons of cryptocurrencies, along then with Rocklinc's crypto position. So on the next slide, I just want to say a couple of things about U.S. tax cuts. You can see here that what's being proposed at this point is a corporate tax cut from 35% down to 20%. Now, there's some talk that might go back up to 22%, but you're talking here about a substantial tax cut for U.S. corporations, particularly small to mid-sized corporations who don't have the luxury of all of the tax planning that some of the large multinationals have already been doing, and so their tax rates actually are quite a bit lower than 35% already. But for a lot of domestic companies, their tax rates are quite high, and this is going to have a dramatic impact. We should see overall, in terms of the S&P 500, over 10% increase in earnings next year if this actually goes through, which is a substantial increase in earnings simply as a result of tax cut. There's also a one-time tax cut on a overseas repatriation of earnings, and that'll be 14.5%. And so there's a lot of multinational corporations that are U.S. based that have, at this point, they estimate close to $3 trillion offshore that is staying offshore because of the high tax rate in the U.S. What Trump is proposing is that tax would go from 35% to 14.5%. And so quite a bit of that money you would expect would come back to the U.S., and that is obviously going to benefit those corporations. And then you have a personal tax reduction and simplification, which is always a net positive if you keep money out of the inept state, if you will, or the coffers of the state where they typically waste taxpayers' money. Now, on the next slide, we just talk a little bit more about these U.S. tax cuts. The big question, of course, is how much of the tax cut is already priced into stocks? And I think quite a bit probably is. So yes, we're getting a jump in the stock market today, but it wouldn't surprise me if we actually had the market come back a little bit, because often you buy on rumors and sell on news. So we'll see what happens. Also, the impact of the tax cut, on especially the corporate tax cut, should be quite large across the world, as companies will have more money, multinational companies, U.S. companies will have more money to invest in their business, also to buy back stock and perhaps increase dividends. The last point I have on the slide, I just talk a little bit about the fact that Canada, it should put more pressure on Canada to be careful about increasing taxes. And if we continue to increase taxes and we continue to go the way that we have been going the last couple of years, both provincially and federally, this will be a disadvantage to Canadian companies. So that's just a little bit about U.S. tax changes. Let me speak now in regards to cryptocurrencies. On the next slide, we talk here about the rise of cryptos. What is a cryptocurrency? Is this really just a 21st century unicorn, if you will, something that's imaginary, a fantasy, or is it the money of the future? And so let's just step back a second. I mean, what is really the purpose of Bitcoin and the cryptocurrencies that you're hearing so much about in terms of the market? Well, it's to develop a peer-to-peer electronic cash system, a direct cash system between individuals. And so the definition that I have on the slide in front of you is that cryptocurrency is supposed to be a medium of exchange. It's created and stored electronically. It's all digital in what they call the blockchain. which is a distributive ledger, so that the money isn't just in one spot, or the Bitcoin is in one spot. It's distributed amongst digitally in the system, and it's encrypted. So there's a control over the Bitcoin or the cryptocurrency. So there's a security protection, if you will, through encryption. And therefore, part of the blockchain and the encryption is that you can go direct to someone else and be assured that they actually have what you're looking for. And so you can do this exchange and protect yourself so that you're getting in the exchange what you are intending to get. In other words, what you've transacted. The Bitcoin is the first cryptocurrency, and that was actually created back in 2009. Now, in the next slide, I just point out a couple of things about cryptocurrencies. First of all, there really is no intrinsic value in the sense that they cannot be redeemable for another commodity, i.e. gold, as an example. They have no physical form and exist only in a digital network, as we've talked about, the blockchain. And their supply is not fixed by a central bank, but controlled by the system, if you will, controlled by the founder or the person who originated or developed the particular cryptocurrency. And the network is completely decentralized. And that's very important to understand when you're talking about these cryptocurrencies. On the next slide, I have an interesting observation from Caleb Chen, who's an expert in the area of cryptocurrencies. And he says, in the next few years, we're going to see national governments take large steps towards instituting a cashless society where people transact using centralized digital currencies. And I agree, that is the case. That's exactly what's coming down the pipeline, a cashless society using digital currencies. And so what the founders of the cryptocurrencies are attempting to do is create at the same time, a parallel system of a medium of exchange that is completely decentralized and gets you around the state, if you will, around the state, the different central banks, creation of money, and so on. They would argue that as this whole digitization of money takes place, that people are going to be more interested in Bitcoin, in the cryptocurrencies, than state-run currencies because of all of the problems you have with fiat currency and the fact that you can't trust governments and so forth. I would suggest, though, that that's assuming that you can have full confidence and full trust in the cryptocurrencies, which is a step of faith also. But this is an important quote that Caleb gives us, because it gives you a sense of their thought process in terms of offering the cryptocurrencies. Now, in the next slides, a couple of slides, I really talk about the pros and cons of cryptocurrencies. And again, this is really just a distillation of our thought process here. So on the first slide, we talk about the pros of cryptocurrencies. And so, yes, direct peer-to-peer electronic cash payment. It's very powerful. It's irreversible. You can do it without anybody knowing who they're transacting with. It's fast and it's global. Second, you bypass the banking system and the central banks. As I said before, it's a separation of money and the state. I actually like that. I think that's a great idea. The state controls too much of our monetary system, and it isn't working out that well. Third, you get around the use of depreciating fiat currencies, which are built to lose value. All of the paper currencies of governments, the fiat currencies that we have, are all programmed actually to lose value as a result of printing them and creating inflation. I mean, the ultimate goal of most governments is 2 to 3% inflation. So by definition, they're depreciating your currency. And in extreme cases like Venezuela or Zimbabwe, or you could talk about Nigeria, you could talk about South Africa, Brazil, all sorts of countries around the world, a lot of people in those countries would much rather have a cryptocurrency than their own national currency. And so this is a pro. And then there's the promise of a fixed supply, that within each cryptocurrency, there's only so much, and that's it. They don't create any more. So that is a pro also. And then the last point, fifth, owners of these cryptocurrencies are typically not spending them, they're hoarding them, and therefore if someone else wants to buy them, they're actually spiking the price of the cryptocurrencies. And that's why you've seen such massive uptick in some of these cryptocurrencies. Now, On the next slide, there's also cons, as you would expect when it comes to any new technology, and so I've listed some of the cons. First, the volatility is extremely high. It's impossible to value in any traditional manner, and that makes them difficult to value and put into a portfolio. They're digital. They could be open to hacking. Yes, there's a lot of security around them, but that doesn't mean they can't be hacked and you could lose them. There's significant use by criminals and money launderers. Most of the people using the cryptocurrencies are just honest, ethical people, but there's no question that there is an unseemly group of people that do use the cryptocurrencies. Increasing number of cryptocurrencies entering the market, so there's the proliferation of cryptocurrencies, which can add to a dilution, if you will, over time. Even if the individual cryptocurrencies are maintaining their supply, you can get more and more hitting the marketplace in terms of new types of currencies and new individuals trying to cash in on success. And then the last one is really increasing government regulations and oversight. I think is on the way. In fact, governments have mentioned that they will be doing more oversight and watching the cryptocurrencies, and this could include the launch of their own cryptocurrencies. Some of the governments and central banks have talked about launching their own cryptocurrencies. So those are some of the cons. Now, Rocklinc's view, the next couple of slides, I just want to talk a little bit about Rocklinc's view. First of all, we want to stay true to our investment philosophy. We're not speculators, we're long-term investors. Cryptos are difficult to value, and they're very volatile for investors' portfolios. And we're not trying to make a prediction of the future price of any cryptocurrencies. What we're saying is it's almost impossible for us to value them and to know what the future has for these various cryptocurrencies. And that concerns us as long-term investors and certainly as individuals that are stewards of your capital. Currently, we do not understand them enough to buy them. There's just too many unknowns, including pending regulation and the drive on the parts of the governments all around the world to legislate and control all aspects of not just cryptos, but our lives, including even our thoughts and our beliefs. If you're really following the news, you're hearing more and more about governments trying to control more and more of our lives. And I'm going to give you a quote in a second that I think exemplifies the view of people who are supportive of cryptos, but I just cannot see a future where the government is not going to have its meat hooks all over cryptocurrencies and include anything that is being transmitted digitally. And then the last point I just say here is Western civilization overall is in decline, and with it many freedoms and freedom of speech and freedom to transact directly. And governments want more and more control over everything that we do. Now I make those points because in the next slide, as we just finish up this presentation, there's a very important quote by Laura Shin in terms of the cryptocurrencies. And I've entitled this, Death of Free Speech. Is that not what we're already seeing today? Now, if you look at this quote from Laura Shin, I think it's very important. I wish it were true, and I wish Laura was correct, but I'm going to disagree with her overall assumption, which is behind this statement. And so let me just go through this statement quickly. I think it's very important in terms of understanding cryptocurrencies. And in this case, she's talking about Bitcoin as one of those cryptocurrencies. What Bitcoin did is it turned code, computer code, into money. So Bitcoin is pure code. There's no paper, there's no guns, there's no federal government, it's just pure code. So to stop Bitcoin, you've got to stop code. And code is actually just speech. It's just a bunch of numbers and letters that I write down and that the computer interprets. So you have to stop me from writing those numbers or letters down in a certain sequence and conveying them to other people, and to stop them from loading it on a computer somewhere in the world, and to stop someone else from then turning that into money. So you can't control the way money flows unless you can stop the developers from talking to each other and thinking. And the regime that could do that would probably be one of the evilest regimes on the planet. Now listen, we live today in Canada, in the Western world, in a situation where, in fact, the government is overreaching in every different sphere of our lives, including our families, our schools, our churches, our freedom of speech, our religious freedoms. And I think that Laura is incredibly naive to think that our governments already, in their current forms, aren't going to want to overreach and obscure the freedom of speech that she's talking about, the freedom to move code back and forth in the form of Bitcoin. I don't buy it. We live in a country in Canada, in Ontario here, that if you disagree with the Ontario government in terms of your view of a family, even the formation of a family, or the areas of human sexuality, the state now has the right to take your children right out of your family. We have a federal government that if you're a Canadian, you're concerned about ISIS fighters returning to our own country, and you call the government to task for not protecting our security. We have a prime minister that actually labels you, and he calls you Islamic phobia, or he gives you a political identity in order to shut down your free speech. And that's in Canada. It's far worse in Europe. It's obviously far worse in communist countries like China and in many of the African and South American countries. And so to think that the government is just going to allow this to go on, and that we don't already have evil regimes around the world already, I think is very naive. So let me just take you to the last slide. What the wise man does at the beginning, the fool does at the end. Be careful. Yes, there's been a lot of money made in cryptocurrencies. There's been a lot of money made in Bitcoin. But I think the easy money has been made. And so be careful if you're going to trot into the area on your own now. Envy is not a good investment strategy. Just because your neighbor can brag about some returns doesn't mean you have to make the same returns in the same asset. Be very careful about that. We wish success to the cryptocurrencies. If they diminish the influence of the corrupt state and central banks in their control over, a failed monetary policy around the world, if cryptocurrencies can do that, wonderful, terrific, we're all behind it. But I'm highly suspect that in the end won't take place. And so I suggest, again, as we do in a lot of our portfolios, buy tangible assets that can at least protect you from some of the erosion of purchasing power. Make sure you've got some money, as we do, in precious metals and some of the related securities that also benefit from price appreciation in precious metals. They are cheap, and we believe that they could go up quite a bit in a bad market situation. So there's an update. I hope it's helpful. I hope it's thought-provoking for you. If you have questions, please do not hesitate to email or call or stop by our office for our clients. Thank you very much for listening. Bye now.